What's good, bros? In this video, I'm going to give you guys a full A to Z guide on how to pass a funded account in 2025. So first of all, I want you guys to imagine being able to trade with $50,000 in a trading account, being able to trade with $100,000 in a trading account, being able to trade with $200,000 in a trading account. It seems pretty freaking crazy. And on top of that, what funded accounts give you guys the opportunity to do is not be able to put $200,000 of your own capital up for risk for you to potentially lose all of that money, but it gives you the chance to be able to, one, prove to the prop firm that is giving you the opportunity to be able to pass this account that you are, one, a profitable trader, and two, capable of trading on a live account to be able to make a significant amount of profits and to be able to get payouts. So that's exactly what I want to cover in this video for you guys today. I've made a whole bunch of money in trading, and I trade on a live account because I have a whole bunch of capital, but this is great for you guys who are just getting into trading and you guys are trying to learn the ropes and you guys don't have a whole lot of capital to be risking in the first place, but this is the best way to leverage your guys' capital in the early phases of trading to be able to start off with literally like under $100. I'm going to show you guys how you can start off with under $100 to be able to be trading with upwards of $5,000 to $10,000 in a trading account, as long as you guys are good at trading. And again, I'm going to break down strategy, risk management, and the best way to go about passing these funded accounts. So with that being said, we're going to first get into what prop firms are, how to understand these funded accounts in the first place, the rules involved of passing these challenges, because again, they're not just going to come through and be like, here's $50,000, have fun. Okay, there's rules involved, obviously, that we have to stay within in order to receive these payouts and in order to actually make money here. But this is by far one of the best ways to leverage your capital in 2025 when in day trading. So with that being said, let's jump into this. Let's talk about prop firms real quick. Let's go over the rules involved and how we can actually beat the system to actually get payouts. So this is probably one of the biggest prop firms in the space right now. This is Alpha Capital. I'll leave a little link in the description to them, but this is essentially what a prop firm is, okay? So this is a company that gives you guys the opportunity to leverage your money, to have the potential to trade with their capital and be able to make a significant more amount of money than you would with your initial starting capital. So first thing that we need to understand is the rules involved with prop firms. So again, like I was saying, they're not just going to throw cash at you and say, have fun, go do whatever you want. What you guys have to understand is, again, understanding that you have to prove that you're a profitable trader first. And how do we go about that? By passing a challenge. So it depends on what prop firm you go through. This is a super solid one. I don't really care what prop firm you guys go through. You guys can look up best prop firms in 2025, whatever you guys need to do. But this is the one that I'm going to be breaking down today. So first and foremost, this is going to be going over, as we can see, we have several different options. We have a 1-step, a 2-step, a 3-step, and this variable up here is essentially saying how many challenges you have to pass or how many tests you have to pass in order to actually get funded to be able to receive a payout. Now you're probably saying, well, why would I want to have to pass 3 challenges in order to get a payout? Wouldn't I just want to pass 1? Well, yes, ideally we only want to pass 1, but again, that comes with varying and different rules that are involved with this. Okay, so the most standard is going to be a 2-step account. Okay, I'll go over varying different accounts. This is starting off with Forex. I'm going to be going over futures next in the rules involved and the different ways that I would go about using risk management and strategy for both of them. So don't worry, if you're a Forex trader, I'll cover you guys. If you guys are a futures trader, don't worry, I'll cover you guys. So we're starting off with the Forex rules. Okay, so this is a 2-step account, Alpha Pro 8%. And as we can see, there's several different options that we have within here. So let's say we want our profit target to be 8%. Okay, so alpha profit target at 8%. As you can see right here, it's literally starting for under $100, which is absolutely insane to be able to put down $77 to be able to have the potential to trade with $5,000. It's pretty insane that we're able to leverage our money in this day and age with day trading and to be able to make significant amounts of money. So let's look. So we can see that this is the first step, okay? The first challenge, okay? These are the rules that are involved when it comes to passing the first challenge to prove to this company that you are a profitable trader. So it goes over the leverage that they are going to give you, and then it shows the profit target. So obviously we have to prove to this company that, hey, I'm a good, profitable trader. They say, prove it, make some fucking money. So on the first step, what do you have to do? You have to make 8% on the account. And you're probably saying, well, that's easy. I'll full port the shit. It's not as easy as that because there's drawdown rules. So if we look right underneath that, we can see that the maximum amount of drawdown is equivalent to what your profit target is. So they're pretty much saying, hey, on this $5,000 account, we just want you to make $400. But on the contrary, to prove that you're a profitable trader, your account balance cannot go negative $400. So if we're trading on a $5,000 account, our goal is to be able to make $5,400. And on top of that, our goal is to make sure the account never goes underneath $4,600 because that would cancel our account and cause us to lose this money. But then again, if we think about this, if we know that we're a profitable trader, this is by far one of the best ways to leverage our capital. Now, moving forward, this is still on the first step. They give us daily drawdown rules as well. So not only do we have a maximum drawdown of $400, we have a daily drawdown of $200 or 4%. So they're pretty much saying, look, we want you to make 8% in total. That's fine. We don't want your account balance to go down 8% or else it's said and done, you're not profitable, or just try again. On top of that, we want to make sure that you're using good risk management. We want to make sure that you're not just pressing buy and hoping for the best, putting a whole bunch of leverage and a whole bunch of risk on the table. So what do? They give you a daily drawdown, which is pretty much saying, if I go ahead and I risk $201 on the day and I lose, then guess what? The account is gone, I lose the challenge. So again, if our daily drawdown is 4%, that means we can only lose $199 on the day to keep this account alive. And again, I would not recommend risking the full 4%. We're going to go into risk management strategy and the type of trades that I would ideally like to be taking on these prop firms, so you guys can avoid even thinking about possibly hitting this daily drawdown area. Now, on top of that, how many days do you have to pass the challenge? What are the trading days? Absolutely freaking unlimited, okay? You guys can trade for however long. If you guys start it today, you guys can do this for 6 freaking months. As long as you stay within these drawdown rules, let's say you're just break-even trader the entire time, you guys will still have the account and you guys will still have the opportunity to be able to pass it to go to what? The next step. So following that, they want to double check your shit, okay? So again, this is a 2-step. The first step is saying, hey, I was able to make $400 without making my account go down $400 while also not risking more than 4% on the day. And it happened over the course of however many days. Boom, we're on to step 2. And guess what? The second challenge is way easier than the first one. They're just saying, look, we want to triple check your shit just in case you were like fucking scamming on the first one. But this is the second step. It's pretty much the same exact rules, except an easier profit target. Instead of having to make $400 on the account, you only have to make $250 on the account. It's only 5%, okay? Same maximum drawdown as before, saying, hey, just don't let the account go down 8% and you'll be solid. Same daily drawdown as before, saying, hey, just don't let the account go down 4% in a single day and you're solid. And guess what? You have as many times as possible for you guys to pass. And if you guys are able to pass that, then boom, you're freaking qualified, bro. And you guys are able to trade with $5,000 and you guys are actually able to, guess what? Get a payout. So let's go over some of the rules that are involved with this. Is there a profit target once you've passed both the challenges? No, obviously not, because now you're trading with money that you can actually, they're not testing you anymore. They're saying, look, make your money and we'll pay you, which is awesome. Okay. Then we look at the drawdown. So again, this is something that you guys need to understand. These companies, they have to still put limits on you guys once you pass the first step and the second step. Why? Because if you guys just get into your qualified account and then you're like, bet, now I can do full risk, now I can full leverage my shit. No, they're not going to let that slide. So the same rules apply with the drawdown limits. So as long as you guys don't let the account balance go under 8%, you guys are absolutely chilling. As long as you guys don't let the account balance go under 4% in a single day, you guys are absolutely chilling. And whatever money you guys make on this account, you guys get to keep 80% of it. So you guys get 80% of the reward on this. Now, I don't want to get you guys super de-duper overly excited about this, but this is on a small account, right? This is the smallest account possible. What if we were to scale this up to a $200,000 account and we give you guys some sort of perspective on the type of money that you guys could be making? Okay, again, these are the limits. Your simulated profit target is $16,000. Your drawdown is $16,000. Your daily drawdown is $8,000. Okay, if you're able to pass the first step, you move to the second step. It's the same thing, 5%, 8%, 4%. But let's say we get qualified on a $200,000 account. And let's just say, hypothetically, that we're able to make the same amount that we did in that first step. And we're able to do that again within the qualified account. You guys are walking home with $12,800. You understand how crazy that is. That's literally more than a 12x return on your investment. So again, what are you paying to be able to have the opportunity to be able to pass this challenge and get qualified to be able to get a payout? You're paying pretty much $1,000. But again, if you guys are able to pass these steps, you guys are able to recreate what you guys did on the first step and make $16,000 on your qualified account, you're walking home with literally a 12x ROI. It has never been, I don't want to say this easy, but it has been, we're living in like literally the best time ever to be a day trader, to be able to leverage our money, to be able to make significant amounts of money within day trading just as a whole. It's super freaking awesome what we're able to do with these prop firm accounts. So that is like a general overview of the rules and the profit targets and how these prop firms work. So that covers Forex. Now what I want to do is I want to cover futures, because futures is what I trade. I trade on indexes. So this is for everybody that trades gold, that trades GBP USD, that trades Euro USD, okay? All of that. As you guys know, I trade indexes. I trade the S&P 500. I trade on NASDAQ. So we're going to be buying and trading with a little bit different accounts. This is still going to be within the same prop firm, okay? So it's going to be on Alpha Capital, but Alpha Capital futures, okay? And if you guys want, I have a little code for you guys. You guys can use code TJR. So if we plug this shit in, let's just say $200,000. And also another nice thing about this, one, we can choose whatever we want. We get a fire ass discount on this, and we can choose whatever platform we want. So we can choose MetaTrader 5, we can choose CTrader, we can choose DXTrade, whatever we want to be able to make this shit work. And again, like I said, there's other variables too. We can do a one-step account. So I'll give you guys a brief overview of this. Again, this is just one step. So one singular challenge. The profit target is making 10%. The drawdown is only 6%. The daily drawdown is 4%. So again, the one step is pretty much saying like, hey bro, you're going to have to prove to us even more than the two-step, because the two-step is like, okay, this is a little bit easier to pass. And then the second step is like, okay, this is just verification. But the one step, they want to make like for sure that you're actually good at trading. So they're saying, hey, you need to make 10% on this account while keeping your drawdown only to 6%, keeping that daily drawdown to only 4%. But if you're able to pass that, then awesome. You're qualified and you're ready to freaking go. Okay, so now I'm going to jump over to futures, okay, Alpha Capital futures, so we can go over the rules and regulations with that one as well, okay? Now this is Alpha Futures. Again, these rules and regulations are a little bit different because now we're talking about trading on futures, not Forex and commodities. So it's going to be a little bit different because we're talking in terms of contracts and just trading on different platforms. But if you guys are familiar with futures, like the way that I trade, trading on indexes, then awesome, this is for you. So cool. We have 3 different account sizes that we can do. It's a 50K and a 100K and a 150K. And the payment plan on this is a little bit different. So instead of just like a one-time fee, it's a monthly recurring fee. And there's going to be reset fees that are involved with this as well. So we're going to cover all of this. So we'll just start off with everything that's already set up right here. So the minimum trading days that you guys have to do is 2. And just like to be completely frank with you guys, it's literally impossible to pass the account with like literally within one singular day. So this is just like, it's just going to happen anyways while you're trading. Okay, so your profit target is going to be $3,000. So again, it's a smaller profit target than what the Forex and CFDs funded account is, okay? But with this, it's cheaper because you're able to trade with a $50,000 account for only $79 per month. Okay, so again, it just depends on what avenue you're trying to go with this. And then again, what's your maximum drawdown limit? You're only allowed to have the account go down $2,000. This is the evaluation, okay? So there's no profit split, obviously, on the evaluation. And then let's say you fail this, okay? So if you break this maximum drawdown of $2,000, then you keep recurring this $79 a month. So you buy an account and it's $79 recurring a month. Cool. Let's say you fail this, you hit the maximum drawdown. You're able to reset the account for 59 bucks. Okay. So that's pretty much how this works. It's giving you guys like a bit of a discount on resets. And then continuing daily loss guard, there's none during the evaluation. There is one during the qualified account phase, which is again different than the way that the Forex one is set up. Now, consistency rule. This is something that isn't set up on the Forex one, but is set up on the futures one. So this is a pretty lenient consistency rule for real. This is just saying like, hey, you have to be 50% consistent with your trade. So that's pretty much saying like one singular trade can't make up for the entire profit target. So if I place the maximum position size, which is 5 contracts on this, then I can't just have that one singular trade make up for the entire profit target. It has to be at least split up in 2 trades, if that makes sense. So to make that 50% consistency rule make sense, okay? So let's say I take 4 trades. There were 3 wins and 1 loss. The 1 loss was, I don't know, $1,000, and then the 3 wins were $1,000, $1,000, $1,000. You would pass because one trade isn't encapsulating all of that 3,000%, okay? And then max allocation, there's none because this is the evaluation phase. But when you get to the qualified phase, we'll talk a little bit more on that. And then holding through news, you are able to hold through news. This is actually pretty important because some firms have strict rules when it comes to news. So if there's like semi high impact news, they'll pretty much just say like, yo, bro, like hope for the freaking best. If you hold through this, like your shit might get clipped. They're saying, hey, during the evaluation phase, you are able to hold through news. And then once you guys pass the evaluation, so again, all you guys need to do is make $3,000 on the account. If you break that drawdown limit, you guys can go ahead and reset. And then from there, once you guys are qualified, what do you guys need to do in order to get a payout? So again, similar rules to the Forex. We have a profit target, we have a maximum drawdown, we have a maximum position size that we have to stick to. So we can't place a 6 contract trade, boom, you lose. Okay, we have to stick to maximum 5 contracts. Okay, we have to stay within that $2,000 drawdown limit. And then from there, if we're able to pass all of this, then we go ahead and get qualified. Minimum trading days is 3. Okay, so that means you have to trade for at least 3 days in order to go ahead and request a payout. And then following that, obviously, there's going to be no profit target once you're qualified because you don't have to hit a certain profit target in order to request a payout. And then there's a scaling plan up to 5 contracts. So there's a couple variables within here. We will talk about this. The consistency rule is a little bit tighter on the qualified account as well. Instead of 50%, it's 40%. So it's saying that, hey, instead of just like 2 trades making up for you passing the account or making up for your payout, it's going to have to be a little bit more than that just to show and prove that you're not really gambling here, you're not getting lucky, you're actually a profitable trader. So if we look at the scaling plan, this is super duper in depth, but they kind of go over how you guys are going to be able to scale up with contracts. Okay, going over minis, micros on every single account size. So whether you guys are trading on the mini contract, on the S&P 5 or ES or NQ, or the micro contract on ES or NQ, then you guys will be able to go and look at what your max allocation is as your profit increases over time on the qualified account. And then on top of that, profit split, this is something that you guys are going to want to pay attention to. On your first 2 payouts, you guys have a 70% profit split. So again, let's say hypothetically, we make $3,000 from, like, again, just hitting that profit target that we already passed in order to prove that we are a profitable trader. What's 70% of that? I am a college dropout, so I'm going to plug this in. $3,000 times 0.7 equals, cool. We walk away with $2,100 on our first two payouts if we hit that old profit target. And then for payouts 3 and 4, you get an 80% profit split. And then for 5 payouts or more, you guys get a 90% profit split. And then on top of that, there's a couple other stipulations within here, like the minimum payout request being $200. And then again, there's a whole in-depth dashboard that goes over all of the super nitpicky rules. But again, I don't want that to scare you away from funded accounts in general, because these are, again, like literally the best way possible for you guys to be able to leverage your money. Again, like I don't know anywhere else that you are able to literally be paying $239 per month to be able to have the potential to, like, that is so ridiculous that you're able to pay $239 to have the potential to trade with 150K. Do you understand how freaking crazy that is? Okay. And just like with the Forex firm, I have a code for you guys on this one. If you guys use, let me pull it up real quick. So again, we have different platforms. Trade-of-8 is my preferred one that I would use for futures. Okay, again, we choose the account size, we choose what plan it is. This is only for this YouTube video. It's only a one-time code. If you guys want to use it, it is code TJR. If you guys use the code TJR, it will give you guys, what even is that? That's like pretty much 20%, 15%. I don't even know what that is. 239, again, college dropout here. Oh, motion. 15% off. Oh my God. Okay, so you're literally only paying $200 to have the potential to trade with 150K. Absolutely freaking insane. Okay, so now that we know how prop firms work, how we can use them to our advantage, what the rules and regulations are, and actually like going about purchasing them, now let's get into the strategy and the risk management that I would ideally use when trying to pass these things, because it's a little bit different than the way that I would trade my live account. Because again, these drawdown rules, our daily drawdown and our maximum drawdown is going to be different compared to how we're trading a live account, where there's pretty much no limits on us. But with this, we need to be smart about the trades that we're taking and also about how we manage our risks. So with that being said, let's jump into the charts. Okay, so first and foremost, what are we going to need to be able to do to be able to pass these funded accounts? We need to have a freaking strategy. If you guys are just going in here absolutely blindly and just gambling, you guys will not be able to pass the funded account challenge. You guys will be wasting your money. And yeah, like it's literally just throwing money into the fire. You guys literally might as well just go straight to the casino and gamble it. Like realistically, you guys might as well spin the shit on roulette rather than trying to attempt to pass this funded account without a strategy and without good risk management. So as much as I would love to go into like super in-depth, like every single confluence breakdown on how I would go about strategy, I'm going to give you guys a brief breakdown of a trade that I took yesterday that was literally picture perfect. And then I'm going to go ahead and show you guys like a full 5.5 hour long video that you guys can watch to understand all of these confluences that I'm talking about in this trade recap and breakdown, so you guys can get my full in-depth strategy. Again, like for me to explain confluences, strategy, just all in this one singular video to get you guys to where you guys need to be, it would be literally a 10-hour long video. So what I'm going to do is I'm going to do a trade breakdown of how I trade with certain confluences that I teach all over my channel, and how you guys can use proper risk management using the strategy that I teach all over my channel to be able to take trades just like this. So we're going to look at the trade that I took yesterday. This was a trade on the S&P 500. Also, I'll go ahead and I'll leave a little link in the description. It'll say free course for that whole confluence and strategy breakdown if you guys want to go through that to understand all of this crazy, absurd language that I'm talking about when it comes to confluences, the reasons for why I'm entering, and just fully understanding the strategy in a better manner. Then that's great, because we're going to get down and dirty in terms of language right now. So let's jump straight into this. So first and foremost, when I am trading on funded accounts, I am only looking for A+ setups. So if I were trading on a live account and I see a trade that I'm like, I'm going to enter into partial risk here, is that worth taking a trade on a funded account? No, not at all. Why? Because we're limited with the risk that we can play with. Again, we're only allotted 4% daily drawdown per day and 8% total drawdown in total for the entire account to survive. Okay, so we have strict risk limits on our drawdown limits to pretty much say, hey, look, if you hit this, then the shit's chopped and you're said and done. Okay, so we need to understand that and understand we cannot be taking risky trades. We have to only be taking A+ setups, and we have to know how and where to identify them. So this is a prime time example of what, in my eyes, is an A+ setup. So going into the day, what was my bias? Well, if we look at the high time frames, the first thing that I noticed on NASDAQ and the S&P 500 was this high time frame draw on liquidity right here. And again, if you guys don't know what liquidity is or what any of these terms are, I'll leave a little link in the description for the free course for you guys to get into all that, okay? So, boom. We have a high time frame draw on liquidity right here, and then on the S&P 500, we have a high time frame draw on liquidity right here. Awesome. Ideally, we want to see this draw on liquidity get hit. From there, what am I going to do? I'm going to go ahead and scale down into the lower time frames and identify other draws on liquidity. So we have 1 hour high right here. We have another high right here. We have another high right here. We have another high right here. Okay. And then we also formed this hourly high after market had opened and closed the 9 a.m. candle. We'll do the same thing on NASDAQ real quick. So again, we have an hourly high right here. This is a draw on liquidity. 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 So we have a 4-hour draw on liquidity that could potentially get hit. We also have our hourly draws on liquidity. And then on top of that, what are other really strong draws? Session highs and lows. So this actually encapsulates the London session high. And then if we go ahead and mark out Asian session, this goes ahead and encapsulates Asian session high. So I'm going to go ahead and mark out Asian session high with red, and then I'll go ahead and mark out London session high with blue to understand that, hey, not only are these hourly highs that we want to take note of, but these are also strong draws on liquidity because they are session highs. Okay, we'll go ahead and do the same thing with the S&P. It's super similar. So we have boom, this is London session high right here, and then we have boom, this is Asian session high right here. So again, not only are these hourly time frame draws on liquidity, they are session highs that are strong draws on liquidity for price to potentially go to. From there, I'm willing to scale down into the lower time frame and just see what price does. So initially, price opens and we get a big move up. For the most part, I am not looking to trade within the first 20 minutes of market open. This is typically when price is going to be manipulating and really setting up for the overall move for the day. So we can see that the first 5-minute candle goes up and we actually take out some low resistance. I'll go ahead and mark this out with green. Some low resistance highs, some low resistance draws on liquidity. And again, if this sounds like a foreign language, go watch my videos. I have a really in-depth video on how to understand liquidity in general. That's like literally 45 minutes long, or you guys can just go through the free course and understand it that way. But we have low resistance draws on liquidity right here. Price manipulates up. And again, we have to understand higher time frames hold higher power. So yes, are we coming up and taking out these low resistance highs? Yes. But in the back of my mind, I'm thinking we have hourly highs all the way up here. And then we also have this big 4-hour low right here that's looming. We know that we're within the manipulation time frame because market just opened. We're really waiting for 950 for me to be able to start looking for trades. So this is our manipulation time frame. We come up, we manipulate these highs, and then what do? We get a move down. So am I looking to take this short-term, low time frame, pretty heavy, risky trade on a funded account? Most importantly, definitely not. I'm not willing to take this trade. Why? Because I'm trying to capture a high time frame move. Okay, those are going to be your safest bets, especially when trading on funded accounts. We do not want to be trying to trade 5 times per day. Okay, we are not going to be trying to trade 6, 7, 8 times per day. Okay, we want to be taking A+ setups, and just believe it or not, there's not going to be 6 or 7 A+ setups every single day. Like, I hang around a bunch of profitable traders that are not on the internet, that are not here to try and teach you guys how to freaking day trade, okay? They're managing their own capital that's way more than me, and they're like, oh yeah, I've only taken one trade for the month. Ideally, that's where I can scale up to as well, but if we're thinking as a really good trader, the best is less, okay? So we come up, we take out low resistance draws and liquidity, and let's go over and look at NASDAQ really quick, because this is where everything kind of starts to get put into motion. We take out those same highs, okay? And then we end up, boom, flooding the face down, and then look at that. We end up hitting that high time frame draw on liquidity. So that should immediately pique our interest. Boom, high time frame key level gets hit. For me, in my strategy, especially when trading funded accounts, that is going to be step number one. High time frame key level gets hit. Awesome. When this high time frame key level gets hit, we also form a confluence that I've talked about several times, which is an SMT divergence. So I'll briefly go over that super quick. It's when NASDAQ makes a lower low, but the S&P 500 makes a higher low. So NASDAQ comes down and we push underneath this 4-hour low. But if we look at the S&P 500, we don't push underneath that 4-hour low. So on the S&P, what did we do? We made a higher low, while NASDAQ, we made a lower low. So what is that telling me about price? It's hitting a key level that should give us reactions to the upside. On top of that, it's showing us that the S&P is the leading index, meaning the S&P 500 has more buying power because it didn't want to go down and take out these lows. So from there, what am I willing to do? I'm willing to scale down one more time to the lower time frames, and I'm willing to start looking for entries from here. Again, this is literally A+ type of entry, especially for funded accounts. Like this literally could have gotten you halfway or more than halfway to passing your funded account off of just this one trade alone. So now that I know I'm focused on the S&P 500, why? Because it's the leading index here. How do we know that? Because on NASDAQ, it came down and took out these 4-hour lows, but the S&P 500 had more strength and it didn't want to take out those lows. But how do we know that there's actual buying power? Well, not only do we see a break of structure to the upside on the 1-minute time frame right here, but we also see another low time frame SMT divergence. So from these 1-minute lows to these 1-minute lows, we make a higher low. But on NASDAQ, what do we do again? Not only do we make a lower low on the high time frame, but we also make lower lows on the low time frame. Boom. So we have a high time frame SMT divergence, a low time frame SMT divergence showing us that, hey, we hit a key level. We're showing buying power off of that key level. And on top of that, on both of the indexes, we are breaking structure to the upside, showing that on the lower time frames, there is buying power for us to do what? Go towards our profit targets that we had marked out earlier. So from there, I took this trade on the S&P 500. I did a full in-depth trade recap on this trade if you guys want to look at it. Well, literally the one very last thing that I would want to see would be a continuation of bullish order flow on the 1 minute, because it's one thing for us to hit a high time frame key level, for us to break structure to the upside. I want to confirm that this buying pressure is real by showing a continuation of the trend. How can we see continuation of the trend? Through one of our many confluences: fair value gaps, order blocks, breaker blocks, or equilibrium. In this case, we came in, we filled in a fair value gap with this candle's wick. We get an up candle closure out of that. Boom. That's our entry. Go ahead and put your stop loss underneath these lows right here. It's protected from this bullish confluence. And then where can we go ahead and target? We can target these highs right here because these are now hourly highs. That already is a 1 to 2.29 risk to reward ratio. Like, that is amazing. Okay, if we're risking 1 to 2%, if we're risking 2%, okay, like we're pretty much already halfway there of passing our funded account off of just our first take profit. Second take profit is this other hourly high right here. That's a 1 to 3.48 risk to reward. What if we were to target London session highs? That's a 1 to freaking 5.68 risk to reward. And now we're getting into the range of Maybe we should close this trade a little bit lower if we're trading on the futures account, because we have that consistency rule and we can't have this freaking trade hit an absolute banger so that we have to even it out with other trades, right? So that's something that we kind of have to keep in the back of our minds when trying to pass futures fundeds, okay? But with CFDs, like, by all means, and Forex, you can just let that shit fly. So if you want to hit a banger trade that's like a 1-to-5 risk to reward ratio and just pass that shit in one trade, then by all means, go ahead. Okay? So with that, boom. Like that I literally just walked you guys through, and I'll go ahead and write this down for the strategy for you guys of what I'm looking for. I'm looking for 1, high time frame key level. I'm looking for reactions off of the key level. Sometimes the market isn't going to present itself with the trade every single day by going through this. But that's what we want when we're trading on funded accounts, because every single trade matters when we're trading on a funded, because we have limited risk that we're able to trade with. Okay, and we'll get into risk management right after this. So high time frame key level gets hit. From there, we want to see reactions off of the key level. And then from there, we want to see continuation of new trend off of the key level. And then boom, we're entering and we're exiting when other high time frame key levels get hit. And then also the unfortunate exiting when trade idea gets invalidated. So when we're looking to place our stop loss on this, why did I put my stop loss underneath here? Well, not only did we break structure to the upside, so this low should, in theory, if this trade idea is correct that we want to go higher, this low should not get pushed underneath again. Why? Because it should be a higher low within an uptrend towards these highs and towards these highs and towards the other highs that we had marked out. On top of that, it's underneath the fair value gap, which is what our trade was based off of. So we're saying, hey, we are taking a trade off of a break of structure and a fair value gap getting filled and then a reaction off of it. So we're saying if this break of structure is valid, we shouldn't be coming underneath this low. If this fair value gap is actually getting reacted off of and price is going to move higher, then ideally this fair value gap isn't going to get closed underneath. So I have my stop loss in a place that is protected within the current trend and within my trade idea. And that is like literally a prime time example of how I would go about trying to take optimal trade entries on a funded account. Now, with that being said, let's get into risk management on funded accounts, because this is super important. Not only is taking good trades on funded accounts super important, but risk management is super important as well. Okay, so this is pretty much the risk management plan that I would go about for both sets of accounts. So for Forex, I would be looking to risk around 1 to 1.5% per trade, because again, we have to understand that our overall max drawdown limit is going to be 8%. And our profit target is going to be 8%. So ideally, if we're taking good risk reward ratio trades like this risk amount is going to be able to, 1, help us get to that profit target in a pretty sound and quick manner, while also giving us enough trades where if we lose a couple trades, we're not immediately losing all the money that we invested into the challenge, but it's also giving us the opportunity to where, hey, if we only lose 2 trades, then we're only down 2%, or we are only down 3% on the day instead of something really drastic. Like if we're risking 3% per trade and we lose 2 trades, then boom, we only have 2% left to be able to play with before our challenge is gone in order to pass it, right? So I found that this percentage risk per trade of your total account balance has worked the best for me when it comes to passing accounts on Forex and prop firms. And then when it comes to futures, something that we need to understand, the profit target and the drawdown is minimalized. So on futures, we have to be risking way less per trade. And then on top of that, we have to also think about the amount of contracts that we can use, the like max contract limit. So again, on the evaluation, depending on what you guys are using. So if it's a $150,000 account, then the maximum position size is going to be 15 contracts. And our maximum drawdown total is going to be $6,000, which is like 4%. So our max drawdown is 4% on this. So if we think about it like that, it's like, okay, there's a couple thought process that you guys can go about this. If you want to treat it just because of the pricing difference. So again, if we look here on a two-step $200,000 account, right? We're putting $1,000 down just flat, and we have to be way more, I guess, like risk averse when we're trading on this to not just lose $1,000 up front. But when we're trading on futures with a futures prop firm, we can think in a slightly different way here. And I'll leave links in the description to both of these prop firms for you guys to check them out and look at the rules. Again, you guys don't have to use them. This was just the example that I use, and you guys can use my code to get 15% off if you guys want. But with futures, because it's a lot smaller of a drawdown and because the profit target is a lot smaller too, there's a couple of different ways. And because the buy-in is a lot smaller for a much higher account balance, we can think about it in a couple ways. We can, I know this sounds bad, but we can like full port accounts because they are cheaper than the Forex ones. We can technically, if we wanted to, risk 1% of the account balance per trade. So with that, we're risking 1.5K per trade on this. And it's like, okay, that is heavier on the risk because we only have 4 trades to potentially lose to hit that maximum drawdown. But instead of losing $1,000, we're still in for $239, and then we could just hit a reset for an extra $200. But again, with that mindset, sometimes you can get a little bit fucked up, and those prices end up adding up. So again, I just want to give you guys the option here. So there's that thought process saying, okay, I want to take less trades and understand that, hey, I might have to hit a couple resets before I pass this thing and get qualified. Or you can treat it more like a Forex account, de-risk a lot, and it's going to take more trades, so probably like 10 or 8 trades. But if you actually are profitable, you won't even have to worry about hitting that reset. I know there's 2 types of traders. Some people like going the safer route and just say like, hey, I don't even want to have to think about resetting my shit. It's going to fuck up my psychology. I don't even want to think about that. And then there's other people where they're just like, oh, I just want to be able to I want to make 5 winning trades and then boom, like be done with it. And if that means I have to reset my shit 2 or 3 times to get there, then I'm fine with that. So I just wanted to present you guys with two of the different levers and avenues that some people go with. For the most part, what I see people doing is they kind of go more of the full porting route just because of this being relatively cheaper. Because again, if it's $239 per month for a 150K account, again, this is only a 1-step evaluation here, then it's like, okay, we have like 3 chances to pass it with the full porting risk management risk management and full porting going together is ridiculous, but risking a little bit heavier, and we have like 3 chances for us to pass it to get qualified for it essentially to be pretty much equivalent to what it would be on a Forex account. Or you could just say like, yo, I'm trying to budget beast this shit and just do the 239. You're really confident in the way that you trade. You don't want to rush the process. You're willing to wait a little bit longer, and you scale back on the risk. And again, ideally, you guys are only taking high quality trades on this. And that's exactly how I'll go about passing funded accounts in 2025. I try and make these videos to help you guys get to where you guys want to go in day trading. And I really think that there's no better time in the entire world. I've made several videos on this in short form content talking about people nowadays cannot discredit day trading as a full-time job. We have 17, 16, 18-year-old kids getting $20, $15, $25,000 worth of payouts, and being able to make this a full-time job at such a young age, where before day trading had this really bad stigma to it saying like, oh, join my signals group. Fuck that shit. Okay, we're not joining no signals group. We're not doing any of that. We're learning from real people who have real results. Like, again, I go and I show every single trade that I take on a daily basis, whether it's a win, whether it's a loss, whether I didn't even take a trade for the day, to show you guys what's possible with trading. And I really want all of you guys to succeed. And this is a key and really awesome step to help you guys leverage your capital to be able to get to where you guys want to go, to be able to just start making money online within the day trading space. It's so awesome, the amount of tools and resources that we have nowadays to be able to make day trading possible compared to back when I was starting. Like, we didn't have freaking futures prop firm accounts, okay? We like had super way harder rules on Forex prop firm accounts. And we didn't have mentors like myself that were like willing to make videos like this to help you guys get you to where you guys want to go. And again, I make these videos on YouTube for my old unprofitable self, so that if he was starting off and if he's trying to figure out how to pass a prop firm account, like, this is what this video would have done for him. It would have given him an awesome guideline of where to go to actually get funded, and then on top of that, how to trade, and then on top of that, the correct risk management to use. And again, if you guys want to learn more about the confluences, more about strategy, more about trading, my YouTube is just a really awesome archive of like just absolute brain dumps of me going over trading concepts and confluences and strategy and risk management and psychology just for hours on end. Okay, go watch my freaking boot camp. Like, I've literally made 1,500 videos on YouTube to post out here to the world for you guys, so you guys can learn how to trade for free. And again, if you guys are like stuck up on the free content and you guys just like can't seem to get through that wall, then by all means, that's completely fine. I know that a lot of you guys have like super personal questions, and you guys have mistakes that you guys are making that don't necessarily get covered in YouTube videos. If you guys want to be coached by me to show you guys how to pass funded accounts just like on your own with other profitable traders that are passing funded accounts on a daily basis, like my day trading blueprint, I don't want to suck myself off here, but we have by far the most amount of funded accounts passed than anybody else in the entire space. And on top of that, I would like to challenge any other day trading mentor to have more funded account payouts than the people that came from my program. Like, it's just mind boggling. I think last month we were able to get, I think it was over $250,000 in payouts just from students alone. So if you guys want to join my program where I teach you guys how to do all this, where I give you guys in-depth confluences, in-depth strategy, get on phone calls with you guys and give you guys in-depth coaching where you guys can literally go to me and be like, hey, this happened yesterday and this happened, then this happened, and I didn't know what to do in this situation. And then we can answer those questions live right in front of you guys, so you guys can skip over all of those bullshit mistakes that at the time, like when I was in that unprofitable situation, probably would have taken me 6 months to be able to figure out the solution to that. But if you guys just want to fast track that, then that's exactly what I'm here for you guys to do. Again, my free information is awesome. If you guys don't have the capital to whatever, invest in a mentor, that's completely fine. That's what these YouTube videos are for. But if you guys have the capital and are willing to invest in yourself, invest in your own education, invest in something that can potentially change your life forever, and so you guys can actually get started with day trading and start making money online, then I'll leave a link in the description for you guys to join my day trading blueprint. Again, we have by far the craziest amount of, go to my Instagram right now. I have literally 6 pages worth of testimonials of people passing funded accounts, people getting payouts from funded accounts. This shit is my bread and fucking butter of teaching people how to go from having very little capital to getting their first payout on a funded account. This is literally my expertise. And yeah, with that being said, I love and appreciate you guys. I'll leave links in the description for the prop firms that I mentioned in this video, the free course that I mentioned in the video, and if you guys want to become my student. I love and appreciate you guys. I'll catch you guys in the next one. Peace out.